very glad to welcome Ben Peters, co-founder of Evenlode and fund manager of the Evenlode Global Dividend Fund. Welcome, Mr. Peters.
Thank you.
First question, perhaps the audience doesn't know anything too much about Evenlode. Perhaps you can tell me some background facts about the company.
Yeah, absolutely. So Evenlode Investment, we are based in Oxfordshire in the UK, so we're not based in the city of London, but out in the countryside there. We've been around since 2009 when we launched a UK dividend strategy, so our 15th anniversary this year. But fast forwarding to today, we're managing about $8 billion on behalf of our clients across 3 strategies, the UK income strategy, the global dividend strategy as well, and also a global unconstrained global opportunities strategy. And we are an investment team of 18 on the team and 38 in the business as a whole. We're very much dedicated to investing according to our investment philosophy. So we have one philosophy, 3 slightly different flavors of that philosophy, but one strategy essentially, and the team is very dedicated to delivering that. It's probably worth mentioning that the business is an employee-owned business, so it's an independent asset management firm. The controlling stake in the business is owned by a trust for the benefit of the employees, so very much intended to be a long-term ownership vehicle, and we really think about equity investing with a long-term mindset, and we're applying that approach to our own business. So we very much want to be independent and be around for our clients for many years and hopefully generations to come.
So this long-term approach is very important for your company.
Absolutely, yes. I think that we are equity investors, and I think that one should approach equity investing with a long-term mindset. Investing in good businesses, letting them grow and deliver returns for clients is really what we're about. But the stock market can be a volatile place, and I think we need a strategy. One needs a strategy, and we have a strategy that will deliver over a long period of time. So in order to deliver that, it's very important that we set ourselves up in terms of the team, in terms of our own structures and processes to make sure that we can deliver that over many, many years.
Can you tell us a little bit about the stewardship in your company?
Yeah, absolutely. I think stewardship and ESG is very important to our investment approach, because when we're looking for businesses that can compound our shareholders' capital through time. We're looking for things that might derail that might make that go off course. And some of those things are to do with stewardship, environmental, social and governance factors. So we very much look at it as from a risk basis, but also these matters, environmental things like climate change or looking at governance structures within companies. All companies are facing these things, and where we have a considered opinion about those matters, we will engage with companies to encourage them onto better practices that both reduce risk but also give the potential for enhancing return to our clients over the long term.
It's also a long-term approach.
Always, yes.
Yes, always. We talked a little bit about your fund. Could you tell us a little bit about the Global Dividend Fund?
Yeah, so we launched the Global Dividend Strategy in 2017. So we are about 6.5 years old in terms of the strategy as we stand here today. We're managing about $3 billion in that strategy. And really the aim is to deliver a consistently growing dividend stream to our clients over the long term. So we look for companies that can generate excess cash flow, they can invest some of that in their businesses to drive the growth in the future, but then there's plenty left over to grow the dividend distribution to shareholders through time. So we say it's a dividend growth strategy, it's not a high yield strategy. And if you find companies that can grow their dividends consistently through time, then over time the capital values tend to follow that dividend distribution. So the total returns can be very attractive, particularly given the risks that one takes investing in that sort of business.
That's a stock picker strategy?
Absolutely, yes. So the portfolios we manage are quite focused. So there are 38 businesses in the global dividend strategy, to give you an example. So yeah, we do very much pick stocks. We find that the characteristics that we look for in businesses tend to come from certain sectors, businesses in certain sectors. So big ones for us are information technology, business service companies, and sort of data and analytics companies. Consumer goods, certainly, we find fit the bill, certain healthcare companies also, and so on. So we do find there are certain sector biases that we are upfront about in terms of the types of companies that we look to invest in. We will then construct the portfolio on the basis of what's the best combination of quality but also valuation. So we do value all of the businesses that make it into our investable universe, and we do manage valuation risk and opportunity as the market evolves and throws up those opportunities.
And in the regional views, are there overweight regions?
Yeah. So I mean, the global stock market is very much a US-centric stock market. I think it's about 72% of the MSCI World Index is US-listed businesses. In the global dividend strategy, it's rather less. It's actually about a third of the portfolio is in US-listed businesses, and that's a reflection of the relative valuation opportunity that we currently see compared to Europe. So this side of the pond, where for various different reasons, I think companies tend to trade at a better valuation, and we're very happy to go globally where the valuations are. And this may well change in the future, but as we stand here today, that's the situation. Interestingly, even though we've changed that exposure to where it comes to the listing country, actually where the businesses do business, so where the revenues for these businesses come from, hasn't really changed at all. So these are very multinational businesses, so it doesn't really matter to us where they are listed. If they're good businesses, according to our criteria, and the valuations make sense, then we're willing to invest.
Mr. Peters, thanks a lot for coming here and answering the questions.
Pleasure. Thank you.